Financial crime prevention training. Welcome. We call this Outsmarting the Criminal 2024. What we earlier said was we basically had a slice of data to include some recent cases and also some development in some of the cases that we had shown to you last year, for those of us who were with us as at last year. We move to the next slide real quick. In the next slide, we're looking at the regulatory authorities that basically governs issues around financial crime prevention training. For you to understand what financial crime is, you must understand money laundering, terrorism financing, bribery and corruption, tax evasion, and global sanctioning. In fact, some people call it the ABC, anti-bribery, corruption, and money laundering, anti-bribery, corruption, ultimately. So we're going to look at some of these things in better details with some case studies in view. Our regulators include the SEC, NFRU, FCC and ICPC, that deals with corrupt crimes, ICPC for public officials, the FCC for just about anybody else out there, the Financial Services Commission Mauritius, because we have our parent company domiciled in Mauritius. So by something called the extraterritoriality rule, whatever is applicable there is also applicable to us over here. We have the FINRA rule, which is basically a US regulatory authority. It's called the Financial Industry Regulatory Authority of the United States. The reason why this applies is whenever US dollars are being used for any kind of transactions, it comes into play. The FINRA rule basically covers you, ultimately. And then we have the FCA, the Financial Conduct Authority of the United Kingdom. And in one of our case studies, you see why we have the FCA over here. So let's move to the next slide real quick. So I've already explained to us basically what it entails. The extraterritoriality rule, that's what the next slide really just speaks to. So we can just start quickly on money laundering. What is money laundering? What is money laundering? Money laundering basically is a situation where, in a very simple, short definition, is a situation where illicit funds are being converted or laundered to look like legitimate funds. So what the launderer is trying to do is to hide the source of the funds. Now, for there to be an offense of money laundering, there must have been a predicate offense that gave rise to those funds to come into existence. So what you have on the screen, you have things like human trafficking and migrant smuggling, you have insider trading and market manipulation, cybercrime, tax crimes, extortion, forgery, piracy, murder and grievous bodily harm, environmental crime, counterfeiting. There are 22 that's currently out there. So once you see offenses like these or issues like this, you can understand that any funds that flows out of these particular offenses tend to be cleaned by criminals or criminal masterminds. And this is what we call money laundering. So when we talk about money laundering, we are looking at the three ways in which money is properly laundered. We call them placement, layering, and integration. For placement of funds, you see the criminal mastermind takes dirty money and puts it into a legitimate institution. For a financial services firm like ourselves, you'll find them basically bringing the money into the brokerage business, for instance, or if you think about an asset management business, some would even use a trustee situation and do that. And this is the reason why we do KYC. This is the reason why we have due diligence exercises, why we sometimes have enhanced DD exercises. Now we begin to understand why we do it differently for different kind of clients as we also proceed. The next is called layering of these funds. So how do you layer these funds? Basically, you begin to transfer them from one account to another account. The whole idea is to hide the roots of the fund, make it very difficult for anyone to trace it. You're hiding the origins of the particular funds. So imagine a fund was generated through insider trading, and you begin to pass that funds across from, first of all, put the money in your bonds, then you liquidate the bonds, and then you put the money into some treasury bills. You liquidate that, you transfer the money into some money market instrument. You liquidate that, you buy a fixed income instrument. At some point throughout the entire layering process, if someone asks what's the original funds, they just put in your account opening documentation, proceeds from investments. But the original source of that particular funds was probably through an illegal crime, an illicit action ultimately. And then finally, we call it integration of the funds into the mainstream economy. Once you bring it to that final bank for transfer, how does the bank receive these funds? So imagine we have a client who has probably laundered money through serious other means, layered it in so many ways, did an intermember transfer, which is one of the ways you can literally launder money. You use intermember transfer. After you've done all your dirty deeds with one particular firm, then you transfer those funds to another firm, and then the other firm receives those funds. It's process of investment that has also come in when you send money via your bank account to that particular firm. And when this firm pays, after telling us, oh, do some transactions for us, buy equities here and there, and in 3 months they liquidate, and then they pay it into their final bank accounts, the bank receives it as funds that is coming from Renaissance Capital Africa. And as far as they're concerned, these are the process of investments ultimately. So this is basically the ways money laundering works. So we can begin to look at an example. This basically happened using a Cyprus law firm. So his name basically is Georgy Bedamov. He's a Russian. He was involved in a high-profile embezzlement case back in Russia. This basically took place in, I believe, 2021. Ultimately, he used a law firm in Cyprus called Dadlaw, Demetrios A. Demetriades LLC. He used his law firm to basically embezzle money, and it wasn't just him; it was a family business. You can see later by the side that is his sister. Ultimately, they co-owned Vneshprom Bank in Russia. This happened, I think, he was arrested in 2015 December. That's true. In May 2017, she pled guilty for embezzlement of 1.8 billion from the bank and was sentenced to 9 years imprisonment. One of the things that you see him doing during the time, based on leaked court documents, how did they pull this stunt off? There were documents that showed that Dadlaw, which was the law firm that they used in Cyprus, had backdated a certain transfer of companies to Bedamov from his sister. You know, sometimes when we do things like let's backdate this document or backdate that document, you might be doing that to avoid certain liabilities that might accrue to government or create some instances that certain assets have been sold long before now, where the regulatory purview is being zoomed into that particular situation. So they were doing something like that as well in their own time. They found out some documents were backdated. Documents also laid bare an elaborate series of loans between secretive companies connected to this man during the time of the alleged bank embezzlements. In less than a year, from 2012 to 2013, he received over $15 million in 3 different loans from an opaque Cyprus-registered company. So Cyprus, at that time, was a company that didn't have so much in terms of regulations. CySEC wasn't very heavy at them. Just the fear of even being blacklisted is why you probably would know Cyprus as being one of the most regulated countries in the EU today. They are clamping down a lot of these things. You know, to move out money back then was so easy. To launder money back then was so easy, and this is what we're doing. So they were just transferring money from one company to another company through a loan scheme, and they used that to ultimately launder money. The sister was doing that from the bank in Russia through a series of shelf companies all the way to her brother, ultimately. So that's exactly what happened there. We'll be looking at another case study. This is a very recent case study. It's called Lombard ODA. Lombard ODA is an entity that has been in existence in Switzerland since 1796, one of the oldest entities in Switzerland. What were they involved with? The Swiss prosecutor, basically November 29th, 2024, indicted this bank, Lombard ODA, and one firm's former employee for aggravated money laundering. They said this was of a significant magnitude in Switzerland, and especially one coming from one of their oldest banks as well in Switzerland. The bank and the ex-employee are suspected of having played a decisive role in enabling the concealment of the proceeds of a criminal enterprise allegedly set up years ago by Gulnara Karimova, the daughter of late President of Uzbekistan, Islam Karimov, the Swiss Attorney General Office reported. So this is basically last year situation, but it traces back certain transactions that have been going on between 2005 to 2012. According to the prosecution, they are saying that this lady Karimova participated in a criminal organization known as The Office, which operated in several countries and laundered proceeds into Switzerland. Now, Switzerland is a nation back in the day that we knew for concealment of funds. So a very common thing when it came to Switzerland, they concealed clients' funds, they maintained secrecy. You know, so a lot of these cartels, or how you see this one, is called The Office. It gives me this the blacklist room on Reddington kind of vibe. And what were they doing? They would do all manner of illicit activities all over. They were bribing. They were using the company to basically bribe. You see this that this ex-employee who worked at the bank private client section between 2008 to 2012 and is suspected of having opened or arranged for the opening of 9 different accounts And what they were using this account to do was to hide these illicit funds. If you keep moving from one account to another account to another account to another account, it's very difficult to trace using a statement that one huge fund is just sitting in one account from maybe a terrorist nation, maybe a nation that is flagged for drugs, maybe a nation that is flagged for all kinds of abuses. So this individual working with Lombard Odier in Switzerland game the system and use it to his own advantage. And so we saw that the company in question, as well as this ex-employee in question, had an indictment against them. So Geneva-based Lombard Odier, which dates to 1796, reports total client assets of 296 billion Swiss francs at the end of last year. Like I said, it's very interesting that you see banking secrecies, which is what Switzerland was really known for. Right now, there's so much regulatory clampdown by the international community, the UK leading the charge around that, the US also following up with the charge around that, to ensure that a lot of these countries that are known for hiding assets don't necessarily succeed in doing this any longer. All right, so we'll talk quickly about beneficial ownership, and this is one of the things that you must consider when you're looking at money laundering. How do we deal on beneficial ownership? To deal around beneficial ownership, you look at things like, it's not a defense, first of all, for a front office person to say compliance had reviewed and okayed it. They did a lot. Over here, so I also hear the same thing. Oh, compliance okayed it is not enough. There's certain information that compliance will not have. There's certain information that you personally have because you know the client. The bulk of this work starts with the RM, whoever that relationship manager is. Do not recommend someone to business that you don't know very well. The same thing can be said about vendors as well. We can do the checks that we can do, but I always say this, concerning Hushpuppi, for instance, if you check every negative search engine around Raymond Abbas, you would not find anything about him on the internet, any adverse media about him, not up until that particular arrest in Dubai. So those who knows him personally or anyone who is referring him personally would know this guy's deal is a bit shady. He says it's into real estate, but we can't necessarily say this is the fund that manages that real estate. So these are the things you must look out for. And that is why the bulk really starts from the RM. You can't use compliance as your excuse if anything goes wrong. The cases I've read out to you, you notice that the company was held liable. You notice the employee in question, that's the RM who handled it, were held liable. On no account did they mention compliance. And you won't see that happening. So this training is to help equip you to know what to look out for to prevent things like that. Also, you find situations where complex structures are being used to conceal beneficial ownership. One of these structures are trusts, bearer bond, because whoever holds the bond is really the owner of that. Fronts and nominees structures, NGOs, private investment corporations, shell companies. So one of the questions you must ask yourself is, this particular client you're about to bring, what do they operate as? Does the ownership structure make sense? Who is the actual person in control of that legal entity they are using? Is the client happy to disclose information freely? I'll tell you something for free, and this is something that the SEC will tell you all over the world. If a client is not willing to give you their KYCs up to their ultimate beneficial owner, that's actually a suspicious transaction, and you're required to report it. So another thing again is, do you believe the company is truly owned by the person disclosed? I'll give you a quick case study, something that happened here in Nigeria. A former governor of Kebbi State and one-time Senator Bagaudu amassed 30 billions. This was revealed to us during the leak of the Pandora Papers. Back in the day, a lot of people were talking about how many ministers in Nigeria, pastors in Nigeria, imams in Nigeria had their names on that Pandora paper. So having a trust system is not wrong. Let me put that out there first of all. It's not wrong to want to have a trust structure. There's nothing wrong with that. There's nothing wrong with also wanting to conceal funds. There's nothing wrong with that. But people still use these legitimately created structures to conceal illicit funds. And this is what we'll see about this particular individual, Mr. Abubakar Atiku Bagaudu, who was held by a British firm, interestingly. And I think the world is beginning to wake up right now, because you see a lot of these internationals claiming to be non-corrupt entities. But what they do is that they will advise you on using, like in his own case, this London firm advised him on using an Asian firm. They referred him to an Asian firm to help him launder his money. Because in their own country, they can't do it, but they have the wisdom to tell you how to do it, ultimately. So if it's not happening on their own grounds, or if it's not being revealed on their own grounds, they were seen as non-corrupt. But a lot of the cases you will see have been dated as far back as Switzerland, as far back as the UK, and we'll start discussing more and more of that. So they were referred by Farah and Co., a prestigious centuries London law firm that even manages the British royal family, to work with a Singapore trust entity called Asia City Trust, which was notoriously known for helping clients hide opaque offshore transaction to launder his dirty billions. He was one of those who embezzled during the Abacha regime. So one of the things you must consider when dealing with AML CFT is that you can't tell yourself, oh, they were highly recommended. Oh, it's Stanbic, it's Stanchart. Oh, it's one noble law firm in one magic circle in the UK. It matters not. It matters not. You have to do your own deep dive due diligence. And this is why we do what we do. And sometimes it can come off as demanding and unappealing to the RMs, but we just have to do it, unfortunately. All right, so in the next slide, we're looking at what countries are deemed as high risk. And this is the reason why Nigeria is where Nigeria is on the gray list. And we're trying not to get back to the black list. So if you have shortfalls in the AML CFT framework, you'll be considered as a high-risk country. If your country is known for corruption and bribery, poor public transparency, weak political rights and rule of law, poor financial standards, these are things that basically make a country a high-risk country. Nigeria has been moved to the grey list because we have been working on improving our AML CFT structures, our corruption and bribery structure. These were things that Buhari had completed before he left administration. We're also doing well with our transparency as well, both from a public's point of view, as well as also creating accountability that the whole world could see. So we'll tell you some things that you just look at, some questions you just look out for. Now, the choice of jurisdiction makes sense considering the legal entity and its operations. Why do we ask this question? Somebody from Mexico or a company from Mexico wants to open an account in Nigeria. They'll tell you that, oh, your interest rates are very attractive and we would like to invest in Nigeria. One of the things that you have to look out for, consider is basically, is this good to do? Is this good enough to do? Here, it is good enough to do. If you look at Mexico, Mexico is a country that is high risk. And it's high risk because of weak political rights and rule of law in that very place, corruption and bribery in that very place, poor financial standards and transparency. In fact, a lot of the big banks that play in the UK or the US, like Stanchart, like Barclays, that have business in Mexico, you find out that most of their banks are being used to hide drug-related money, and they've been penalized heavily for things like that. And oftentimes, it's not the Mexican government that penalizes them; it's the UK government. This is the extraterritoriality rule. Because you exist in my region, whatever you do in a region outside of my region also applies to you. In the same way, if they partner with, let's say, a RENCAP, for instance, in Nigeria, Barclays Bank is working with RENCAP, and RENCAP in Nigeria does something that can create a penalty for them. Even if Nigerian SEC does not penalize us, if the FCA hears about it, and Barclays happens to be one of our biggest partners, maybe offering us leverage or whatever, they can penalize Barclays for it. This is how the extraterritoriality rule works. And that's why Barclays used to be one of the biggest partners that we had in the UK, the old RENCAP system, which we used to be a part of. And the moment the sanctions came against Russia, they had to drop us. The same thing can be said about Citibank here in Nigeria as well. They had to drop us because even if we're not sanctioned, just the fact that we're associated, it could stain them before their own regulators. So things like this happens all the time. So we can go to the next one and quickly just begin to talk about suspicious activity reporting, ultimately. In suspicious activity reporting, we talk about unusual activity. Why would you call it an activity unusual? I'll give you some examples. Customers in a trust or a shell company, or a private investment company, is reluctant to provide information about his controlling parties. And sometimes you find it about around some PE funds, some trust companies. The moment you don't tell me who your controlling party is, nothing is saying I can't do business with you. I can, but I have to report your transactions as suspicious transactions. Every transaction you have throughout our relationships. The NFI will be updated about it every time. A customer wishes to engage in transactions that lack business sense or apparent investment strategy is considered suspicious. In some of the cases, you'll find situations where somebody will tell you, just buy XYZ. They know this particular thing they are buying based on the economics doesn't make a single sense. They don't even mind losing money. Most people who launder money are ready to lose at least 15% of that money they're actually laundering. That happens all the time. Provided they can integrate the rest of it back into the economy as legitimate funds, disguising the origin of the funds. They are comfortable with that. So things like that. Customers have been rejected or has had its relationship terminated as a customer of other financial services firms is also unusual. So a firm that a client that nobody else wants to take or people have taken before and rejected, then they're now coming to you. It's also suspicious. Sometimes I've had run-ins around things like this, even in this firm in the past, where you would have someone come in, we try to open account XYZ, but they're giving us so many, bottlenecks here and there to go through. Okay, I hear you. Then I give you my own KYC requirements. And then you start asking some funny questions. It just makes me suspect you. And I filed out immediately to the financial intelligence units. Now, I would say this. The fact that something is filed to the NFIU doesn't necessarily mean that there's any illegality there. We just find the activity unusual and suspicious, and that's why we are keeping it that way. That's why we're keeping it that way. It's just unusual, so that's why we're keeping it that way. So I'll give you some other examples. Red flag. The London office was responsible for the company's trading book, but it was not aware of the identities of the customer that were entering trades into that book. This actually happens even here at RentCap. Back in the day, I remember many times when I'll go and ask Ibami, I saw this, I saw that, I saw some buy, sell, others counseling themselves, explain this, what happened. Then I'll start hearing, oh, this guy in South Africa gives us some instructions. You have to explain those things because they are unusual activities. And sometimes they may lead to market manipulations if you're not very careful. And we'll see some of the case studies around that as well. Security transactions are wound before maturity, and there was no volatility in the market, no conditions or other logical reasons why we do that. At RentCap, we maintain a personal investment dealing policy. If you buy any security, you're meant to hold it for at least 15 days, except there's market volatility that has depress the stock by at least 10%. Then we can let you sell before that 15 days period. So these are the things that happen within the market. But someone comes in, they buy, and just say, sell tomorrow. Sometimes they will inflow funds to you and keep the funds there with no instructions. It will be there for weeks, months, no instructions. The moment they say pay that money back, the bank receiving the money does not understand that what you did, you didn't invest that money whatsoever. They will just think the money is proceeds of investments. So these are the things that you have to be careful about when it comes to unusual activities. Now let's quickly talk about tax evasion. Let's just talk about tax evasion. So tax evasion is the illegal non-payment of or underpayment of tax by individuals or corporates and trusts. How does tax evasion work? So you see this stage one, the tax evader criminally avoids the tax in the first place. The tax evader uses facilitators' services to evade this tax, of course. The facilitator also assists this tax evader to do so. This facilitator is a criminal who basically puts those funds, or is associated with a corporate ultimately, and this corporate engages the facilitator to do the very same thing. So this is just how it pretty much plays out within any society or any economy. Proceeds from tax evasion may be considered as criminal properties. We tell you that if you suspect, the mere suspicion that your client is using such proceeds derived from such activities may constitute money laundering if you assist or facilitate them. So if you know that the funds that is coming, and that's the reason why we ask for certain things. We ask for bank statements, we ask for audited financials. I know in the past we've relaxed on a lot of the requirements that we tend to ask for. From a risk perspective, from a business, a commercial perspective. However, right now we are seeing increasing regulations from two perspectives. Using the NGX as one of the perspectives, the NGX is really increasing their rules every other day. The rules that they've had with the SEC for approval since 2021 are coming into light right now. They've been approved and they're being executed soon. This will put much eye on businesses, especially public businesses. The other is the SEC. The SEC, with his new Director General, who is he's not a relaxing person. He's more forward. He's more direct. He's more engaging. He knows what is, working with the times. Look at someone who basically passes out virtual assets, and he's having symposiums and seminars around things like that. He's also quick to see regulations evolve as well. So with things like that, we have to become a bit more detailed in how we KYC people and how we perform due diligence to ensure that we are not found wanting. any relaxing thing that we saw in the past that may have given rise to things like fraudulent practices, but are not being watched at. Right now, regulations are keenly watching at this, and it's not just about who we deal with in terms of clientele. It also goes with our vendors. It also goes to people who we even share research materials with, the people who we call to do businesses or to buy from our businesses. I'll give a quick example over here. Former Tinkoff owner Oleg Tinkov, he was convicted of tax fraud and fined over $500 million by the US. Oleg pled guilty on October 1st. This was basically as far back as 2019. For a felony charge of concealing more than $1 billion in assets to avoid paying taxes after he gave up his US citizenship in 2013. And this is something that a lot of them do. Because you don't want to pay taxes in the United States, you made the money already from the United States, by the way. You then choose to give up your citizenship. Those who successfully get away with it, that government has blacklisted you never to return. But if you didn't get away with it, they're going to come after you regardless. So he was indicted for his offense in 2019 because the US citizens are required to declare income and pay taxes, even if they live and work outside of the country. We'll look at some of the things that are required when it comes to payment of taxes in the US. This is why we also have our clients fill in the FATCA questionnaire ultimately. So we know if you have a US indicia attached to you. So if you're a US citizen living outside the country, or you are domiciled in the US but you're not a citizen, things like that are part of this indicia. So in the next slide, we're looking at, we just ask some questions around money laundering. If it does not make sense, report it. If you hear or see something that makes you feel uncomfortable, report it. Remember, fraud can occur internally, so do not turn a blind eye because you know the individual involved. Activities outside of normal practice should always be scrutinized. And I think the third point is something that many people fail at. Because you know this person, oh, he used to be this bank MD, or you know he used to work with Dangote, or you know he used to do this for Femi Sodola or Tony Elomedu, and it gives you a sense of integrity. Oh, it's Nicholas, you know, he was compliance officer, he was risk officer. It matters not. It matters not. We call them unusual activity because when we've profiled you, you have a way of doing things, and all of a sudden you woke up and choose to change that way of doing things. It can create problems. And when we see things that we need RMs, you need to ask those questions. Excuse me, sir, you typically put out orders for this or for that. All of a sudden, you're asking us to do A, B, C. Is it a problem? I've actually asked a client that before in this very place. Every year, he would ask for a certain amount of money to be sold from his shares and sent to him. And then, as at last year, January, he asked for 3 times that money. He asked in January, asked in February, asked in March. Sorry, is there a problem, sir? What's going on? You have to ask those questions. The bug doesn't lie on compliance. It lies with the RM, really, whoever that relationship manager is. It's not enough to just execute mandate. You have to ask questions. From the examples given, I've already showed you, they come for those employees. Even if you're an ex-employee, it doesn't matter. They come for the firm. The compliance unit does its best to protect the firm as a whole. And if the employee would listen, protect the employee from their own selves. But if you don't listen, it's very possible to safeguard the firm and the employees to take the fall alone. And you'll see in some of our case studies. So let's quickly look at market abuse. In market abuse, markets, we call it financial crime focused. Market abuse basically shows you how people create fraudulent situations in the markets for personal gains. And there's so much interest in clamping down on things like this. So one of the case studies you see a man called Fabiana Abdel Malek, who was sentenced to 3 years imprisonment, and Walid Kocher also sentenced to the same 3 years imprisonment in respect of 5 offenses of insider dealings. Whether or not insider dealings might be prevalent in the Nigerian market, whether people are making gains from it, at some point regulation sits up. It happens all the time. And when it sits up, especially if you start getting stronger market surveillance units, people who are interested in proving they are doing their jobs. And like I said, regulations are becoming more steeper. You'll find them tracing things. They'll trace things as far back and start asking questions, especially with houses that make quite a ton using their prop books. It might be very difficult to get that with individual clients that basically trade within a particular threshold. But props, very easy to trace those kind of things. And even with the clients, the NGX has a rule. They can actually request for you at any point in time to give them information around a particular client, or without even knowing the client, about a particular trade. So they'll say, trading this particular company transfer. Give us the list of your clients that traded in this stock within the past 2 months. We would like to also have their statements. I would also like to know why they actually have those questions. Why did they buy those stocks? When your clients are trading, you need to actually know the why they are doing what they are doing. The same thing can be said for the IB businesses. A client wants to raise funds, you need to know why they want to raise those funds. Because your regulators can ask you those questions. You don't just get involved and do a transaction without understanding the rationale behind that transaction. I mean, it's proof of proficiency on your own part if you even know the proof. With those proofs, you can prefer the better solution. A client can come, and I think it's something I've also noticed with Dan's relationship with his own clients. A client can say, we want to do this, and then he begins to advise them on better alternatives to achieve their desired outcomes, ultimately. So you can have that at the back of your mind. Just reading some of the synopsis and what happened. In the sentencing, the Queen's Counsel said this. In relation to Ms. Abdel Malek, so you were a gamekeeper using the knowledge you had gained from your employment to become an efficient and accomplished poacher. Judges have very interesting literary statements when they're giving judgments. You say in relation to Mr. Koche, your motive was greed, and so I always have to stay away from greed. In relation to both, there is no question that both of your actions were deliberate, dishonest, and committed over a period of a year. Notice that the firms that they used were not indicted, just them. Just them. So sometimes this happens, and sometimes you find the firms actually being indicted. So on the one hand, I find Mr. Koche did corrupt Ms. Abdel Malek into committing these offenses, and you were the one who received the monies. On the other hand, you, Ms. Abdel, committed a gross breach of trust, which will affect the reputation of UBS. And without that breach taking place, these offenses would not have happened. So these are things tend to happen. The company would have a reputational risk because of the employees. The employees get those sentencing. You must understand that market abuse is a criminal offense. It's a criminal offense. The company only gets hit reputational wise, and they can build your reputation back over the course of time. But you'll be spending those time in jail, so you must be very mindful in avoiding things like that. Some of the examples you have around market abuse, someone will say, oh, I can use a large order which would raise the price of the stock, so it makes sense for me to buy prior to the order and benefit from the increase. In some cases, I ever heard Steve from investment banking talking about his meeting with the CFO of ABC PLC. Apparently, they're going to announce a huge annual dividend, so I think I should buy now. Whatever is not public information, you should be very quick to act on it, ultimately. Let me give you an illustration. Imagine a firm that knows that M&A is about to take place of a listed company. The firm goes, spread rumors into the market. We call it a coupon scoop strategy. A rumor that will basically depress the price of the stock. The stock significantly plummets. This firm begins to acquire it at a very cheap price. So something that was initially trading at, let's say, 50 naira, the firm is quite aware of the M&A transaction to be sold at to be purchased at 100 naira. Then they put out a false information into the market that, there's a potential M&A, but we're thinking they're going to buy at 40 naira. The stock is currently valued as far as these acquirers are concerned. It leads to a depressing the price. The price falls. There's a full bid, a full offer rather. The price falls significantly to, let's say, 20 naira. So people will know, 20 naira is okay, so they're going to acquire at 40. And then these people in question start scooping. So we call it the poop and the scoop. They start scooping significantly. And after scooping, the actual news breaks into the market that this M&A transaction, the acquirers are going to acquire at 100. What they've done is market abuse fully. They leveraged on insider information, and they still did a market manipulation strategy to make gains. If you have a very active market surveillance system, whether within the NGX or the SEC, they should be able to spot things like this through investigations. And like I said, it matters not that you got away with it when you got away with it. It matters not that you even took a bonus for it. The company might be hit if the company made revenue from that very thing, but that employee, they'll call you back. They do it all the time. They will call you back. So you have to be very mindful around things like that. In the next slide, I will give you just some specific examples of certain things that happened. Someone says, I'm going to finish this important order by Tuesday, no later. And then Wednesday morning, you had a major market news that just came out that they pressed the stock. It's an unusual activity for you. It's enough for you to begin to consider that it's possible that this individual understood that something was going to happen in the market that would depress this stock. And those kind of things you ought to report as a suspicious transaction. Suspicious transactions can't easily be known by compliance. It oftentimes has to come from the RMs with your own dealings and your own conversations with your clients. And you should be communicating these things to compliance for reporting. What reporting does is that it removes you and the firm from regulatory penalties or fines or sentencing should this matter come out into public light. You can always say, oh, I reported this compliance. You have an email that you sent that you reported it to compliance. Compliance, the bulk now falls on compliance. Compliance has to file it to NFRU. He has his filing that, oh, I did file it to NFRU just to prove. These things exculpate us. The truth is, you can't completely eradicate financial crime, but you can do your best to curb it and to save yourself from risk. Another example, we need to get these orders ASAP. So I don't mind you being a bit aggressive to get them done. So just things like this are ultimately what you have to look out for. I'll give you another case. This is a case, we discussed it last year. There's been further developments even this year. His name is Tom Hayes, who was involved in manipulating LIBOR. In fact, he was seen as a ringleader. So Hayes, who used to work for UBS and Citigroup, was found guilty in 2015 of multiple charges of conspiracy to defraud and served 5.5 years in prison. He is currently appealing. So he was convicted in both the US and the UK. The US has allowed him. He's done his term, he's gone, but now in the UK, he's trying to appeal his case also over there. Prosecution described Hayes during his trial as the ringmaster of a plot to manipulate LIBOR, which before its recent phasing out underpinned the financial contracts around the world. So what LIBOR basically was done by 16 banks will come, they'll give you the average of their rates, and then this average, they'll give you their rates, and then this rate was averaged out and LIBOR was determined. So what a lot of financial institutions who were big pockets banks were doing back in the day was if they took a facility from another institution, they can manipulate LIBOR as an outlier to reduce the rate, the interest rates, so to be easier for them to pay back. And if they did give out loans, they could also manipulate LIBOR to increase the interest rates to make it more profiting when you are paying back. And they said this man was basically one of the ringleaders that made this happen. The next case we'll look at is something that Dan shared with me very recently, Nomura. Nomura is a Japanese firm, a Japanese financial services firm. So in Japan, there's something called the Securities and Exchange Surveillance Commission. What they do is market surveillance. They look out for things that basically give rise to risk. This incident occurred September of this very year, 2024. So what happened in this very case? Japan Financial Watchdog, that's the SEC in Japan, is fining Nomura with 21.76 million yuan. Interest in the transaction in question, the person who did only gained 1.48 million yen, not yuan rather. So one of the things you need to consider is this thing you're about to do, is it financially worth it? Oftentimes when penalties come from regulators, they make it so steep, so it's a deterrence from anyone else repeating the same thing. So let's just quickly look at Nomura's own case. In Nomura's case, they claim that Nomura basically manipulated the government bond futures markets. According to the commission, a manager in Global Market Division, which trades with the company's funds, was suspended of fraudulently causing prices to fluctuate in 2021 to make a profit by placing large orders for long-term government bond futures trading without intending to buy or sell and then canceling those orders. So you are creating a system that makes people believe that there's actually activities going on in that very market space. And when people are looking at that, quote and unquote, fundamentals, they are making fundamental decisions to buy. But what this person was doing was they were never executing, they were never following through. They would just cancel the order. The trader made a series of derivative transactions to include orders to buy or sell government bond futures contracts, making a profit of 1.48 million yen. The act is serious and undermines the credibility of a securities firm as a gatekeeper in the markets. The watchdog opted to penalize the company rather than the individual because the employee was trading for Nomura. So look at this scenario. The employee was not penalized in any shape or form. Instead, the penalty went straight to the company. Why? Because the trader was acting on behalf of the company, and the company were the ones who made the gains in this very scenario. So I just want you to know that in different scenarios, different things occur. In Nigeria, interestingly, they could penalize both the individual and the company in question. Oftentimes, when you start having investigations from the Inspectorate Division, for instance, of the SEC, or the Market Surveillance Division of the NGX, some of their market regulations outfits, they might come up with something, and based on the investigation, they'll say, oh, you are culpable, you took instruction from this person, but you were fully aware of what you were doing when you took those instructions. So things like that can determine who the bulk of the liability falls on, ultimately. You find situations as well over here. It says securities firms have been fined for manipulation of the Japanese government bond futures markets in the past. Citigroup Incorporation was fined 103 million yen in 2019 and suspended from the primary group of dealers. A year earlier, you see Mitsubishi UFJ Financials, in partnership with Morgan Stanley, also receiving a 218 million yen penalty. And because of this, they were dropped from being underwriters in several corporate bonds. So I need to understand that there's also implications. If RenCap Securities does something that creates some kind of financial penalty that is of significant proportions in the markets, it can cause even the investment banking business to lose deals. Likewise, if the investment banking business gets involved in deals that can create sanctions or whatever, it will cause the RenCap Securities business to lose deals. As a brand, you move together. Whatever implicates one brand also affects the other brand as a whole. And oftentimes, using the holding company rules that the SEC has established, when they hit a subsidiary within the company, it has ripple effects to that holding company as well. SEC just starts unveiling everyone. They want to just see what's happening with everyone. And so we do our best to avoid things like that ultimately. This also shows us, the next slide shows us that it doesn't just, that it also extends to things like cryptocurrencies. What's happened in this very case? This is something that pretty much happens very commonly in the crypto space. Thankfully in the US, they started clamping down on things like this. And now that Nigeria has also started launching virtual assets rules and licensing some of these virtual asset companies who are involved in cryptocurrency, it's not far-fetched that you see similar things also happen in Nigeria. A summary of what typically happened over here. A bunch of promoters set up coins, crypto assets, cryptocurrencies, and they hired two firms, ZM Quant and Gotsbit, to provide market-making services. These were very, very unregistered market makers. The US don't allow market making in crypto assets. Some crypto assets have fundamentals in the blockchain technology, and some don't. Some are just there for being there, ultimately. And what these promoters did by hiring these people was having them market make their own assets. So they were creating activities, they were buying from each other, they were selling to each other, and they created sufficient activities within that coin. And if you are trading in crypto assets, for instance, one of the things that you might look out for while trading is you want to see if there's any flow of funds into that very asset. It shows you that there's an interest in that asset ultimately, even if there is no use case for that coin whatsoever. So you might have use case for Ethereum and those within the Ethereum technology, use case for Bitcoin and those within the Bitcoin technology. We have something called the Tron space. We have the BTC space. So different things, Solana technology, which is under the Ethereum platform as well. So these are, they have use case. Oh, we're settling blockchain transactions. That's what some of these use cases are. But even if you have no use case whatsoever, in the crypto space, once there is fund flowing into that very space, it has a low market cap. There's potential for the market cap increasing significantly. Saeed asked me a question, and that's actually how we've been answering to this extent on the crypto space. So once there's fund flowing, it gives retail investors the inkling that, oh, there's something happening in this particular currency, this particular assets, and they might start buying. So what happened in this case is that these people went ahead and market made. No one asked them to market made besides those who hired them, these promoters who hired them. And retail investors got in. And when these retail investors got in, of course, the price significantly rose and the promoters exited. And they turned the person away with it. In the past, they will use celebrities to do it. You will see the likes of Kim Kardashian coming to promote a cryptocurrency. And people start buying because she's promoting it. And those who use her to promote it will pay her a fee for her advertising. and cash outs on unwitting retail investors. So the SEC in the US, they're clamping down on things like this, and that's exactly what happened in this very space. So from this, we're going to move quickly to bribery and corruption and talk about this fully. In bribery and corruption, how does bribery work? Let's start with that first of all. Many people think bribery is simply direct cash payments. I pay you to do something for me that you would ordinarily not do, except the fact that I am paying you to do it. It's pretty much inducement, ultimately. But there are other ways in which bribery work. If the intention remains the same, the action can vary. Providing training courses can be a way of bribing. Political donations can be a way of bribing. Employment contracts can be a way of bribing. Covering your expenses, providing discounts, giving gifts, getting involved in joint ventures. Some of the things that you see when a contract is being given by a contractor, the office that is giving out the contract to the contractor would pretty much require that none of his staff participate in that contract, and it's very common with oil and gas company. And then you see this staff member who can become a shareholder within a JV structure with the person who's receiving the contract because it's planning for his retirement, ultimately. So these are the things that pretty much plays out. Excessive hospitality. And that's why we have a gifts policy that caps what you can spend on gifts, what you can spend on having private dinners with a clientele, so we don't come out as trying to induce. Now, we understand that in the African culture and in some other climates in the world, we honor people a lot, and honoring requires you to give. So in celebratory seasons like this, we tend to give things. It's not necessarily seen as bribery, because oftentimes when this happens, it's deemed that it's happening within your client universe, people who you've already done work with in the past. Just appreciate them ultimately. However, if you go beyond the cap that your policy has given to you, it might be considered as bribery. So these are the things that you just have to look out for. Inflating an invoice is also seen as bribery ultimately. So Renaissance Capital Africa takes a zero tolerance approach to any form of bribery or corruption. We expect all employees to work ethically and with integrity. Renaissance Capital Africa as a group can be held liable for associated persons' actions as well. So adequate procedures were implemented to prevent bribery, and that is why we have our policies. Please look out for it. At all times, even if it's a colleague that is doing something, whatever it is, just report to compliance. Report to compliance. Sometimes people send gifts that are outrageous to RM's homes. I have learned of a situation, even in RENCAP, where someone sent a gift to a research person's homes, one of the banks that the person was covering. And the person told me, just bring it up quickly. We assessed the value of the gifts, and it came on that radar, so it was okay, it was fine. You just need to be careful around things like that, because sometimes when they do, they don't induce you. And the interesting part is you wouldn't think it's a problem until conversation starts happening and someone says something to the wrong listener, and that then implicates you as an individual. And it went to your house, the firm knew nothing about it, so the firm is not going to have any liability around that bribery. But you as an individual will, understanding that bribery is a criminal offense. You personally will have that jail sentence, so you have to be very careful around things like that. We have a case, the Credit Suisse case, where they were fined 147, about 200,000 USD, and over 147 million euros at the time. Why did this come up? There is the tuna case, or something that happened in Mozambique. There was a couple of bribery that was taking place ultimately by one of their finance ministers at the time. His name was Manuel Chang. And the reason why Credit Suisse were fined for this was, it was argued that they should have known, using their internal controls methodology, they should have known that these things were taking place. And that is why the company was fined. Mozambique got into a debt of $2 billion when it occurred. One of the biggest debts that will cripple a country that was literally just growing its economy. One gentleman who was the finance minister was playing with some of the executives in Credit Suisse. So you look at it, the contractor secretly paid significant kickbacks, estimated at over $50 million to members of Credit Suisse deal team, including 2 managing directors, in order to secure the loans at more favorable terms. And as far as the FCA was concerned, Credit Suisse should have known. They should have had, the internal controls should have been able to spot it out, which is something that the regulators actually look out for. If it's something that within your regulatory universe you've done everything you can do, and you still can't pick these things out, is one thing. Those individuals could be sentenced to prison for their bribery and corruption cases, and the company itself might go scot-free. But if by the regulatory universe, if you had just done better internal control system checks, you should have known. So it says, while those Credit Suisse employees took steps to deliberately conceal the kickbacks, warning signs of potential corruption should have been clear to Credit Suisse control functions and senior committees. So they basically just said, from what our investigation has shown us, you should have known that these things were happening. So time and again, there was insufficient challenges within Credit Suisse or scrutiny and inquiry in face of important risk factors and warnings. So when you see compliance or you see risk or you see legal clamping down on something that's happening, asking certain questions, making certain demands from clients, making certain demands from RMs or from businesses, we do it for a reason. Because when the regulators come, should anything go wrong, and like I said, it doesn't matter if it goes wrong 10 years from now, and everyone in this current business leaves, you can be called back. You can be prosecuted regardless. And the company itself needs to show sufficiently that they made all the control requirements to avoid this from happening. This will ensure the company does not get any penalty or liability from this, but it's going to absorb the individual in question. At the next slide, you'll see the Mozambique Finance Minister Manoel Chang, the kickback master we're talking about. We had mentioned as of last year how he was. We had mentioned last year how he was ultimately involved in how he was repatriated, rather extradited to the US from South Africa, where he fled to after running from Mozambique, how he was in court, how he was pleading not guilty, but as of this year, he has been convicted by the US courts, ultimately. So just know that crime doesn't necessarily pay. Now let's quickly just talk about politically exposed persons. Why is politically exposed persons important? It's important because people, by virtue of their office, can be used for money laundering purposes. Anyone who is a politically exposed person could typically get to that place where they have diplomatic passports. They can cross borders with diplomatic bags. You don't get to search those bags. They can literally carry money out of a jurisdiction to another jurisdiction unsearched. So who qualifies as a politically exposed person? Anyone who works for the executive body, legislative body, judiciary, of course, your central financial auditors like your CBNs, any diplomatic body whatsoever, you're in the armed forces, you're a state-owned enterprise, you're an international organization like WHO, United Nations, you are an immediate family member to a PEP like Sheyi Tinubu is to the President of the Federal Republic of Nigeria, Tinubu himself, Bola Ahmed Tinubu himself, and then you're a known close associate. Emphasis on known close associate. People know you as a close associate to a PEP. So whether or not you're a PEP yourself, if you are walking around with a PEP and they know you as one who is walking around the PEP, you are deemed as a PEP as well. In the next slide, we talk about persons of significant interest. So outside of one who is a politically exposed person, any other person who may not fit into the criteria of a politically exposed person, but by virtue of your influence within the society, you've gathered a lot of influence and exposure, you are liked by people, you are seen as notorious by people, it's enough for us to consider you as a person of significant interest. Right now, there is no regulatory requirements for PSIs, and sometimes they've argued that you should file PSIs under PEP, but I really do not agree with that. Okay, Mr. Dixon, I see your question. Yes, PEP is, outside of those who are actually within that universe of PEP, you have to be a close known associate. You are close to a PEP, you walk around with a PEP, you talk to a PEP. One of the examples I can give you is this. Let me use PSI to give you that example. For PSIs, for instance, a Hush Puppy is a PSI, social media sensation, the Banj as well. These are PSIs. Someone who is close, Davido is also a PSI. There's this gentleman from Edo State that's always hailing Davido. Israel. What's his name? Israel. Okay. So he is also a PSI because he's a close known associate of Davido. That is why he's a PSI. So he might not have the same notoriety as Davido, but if someone like that is, this one is always close to this politician, always walking around, always having conversation, close relationships. They do things together. Someone is traveling to France and he's following the person to France. You automatically qualify as a PEP because you're close and associated with a PEP. The same privileges and rights given to that PEP is oftentimes extended to that individual as well. And the same can be said around PSIs as well. So you're a person of significant interest if you are considered influential by a vast majority of the populace and may often receive large sums of cash due to your popularity. So this is that on PEPs and PSI. Right now, I want to just take us through certain graphs, certain reports that have been conducted around bribery and corruption all over the world, to just give us a purview of what is happening internationally and then how it also applies to Africa ultimately. So this is basically a report that is done by Ernst & Young. We call it the integrity, well, I don't call it, they call it the Global Integrity Report. We have numbers and executive summary numbers for 2022, and then we're extending that. We'll also show you what is prevalent up to 2024 as well. Okay, let's save your questions for after the presentation is done. Mr. Dixon is concerned around this PEP issue. So let's save the questions for when it's done. We'll get to them. Thank you. So let's quickly talk about this. For the integrity reports, you will see 97% of respondents to the Global Integrity Report of 2022 agree that integrity is important. 5% of respondents believe that standards of integrity have either stayed the same or worsened in the last 18 months. So what they literally do in this report is that they measure it across an 18 months time frame, ultimately. I want to also say this, 18% of all surveyed board members would be prepared to mislead external parties, such as auditors or regulators, to improve their own career progression or remuneration. This is 6 times that of employees, 18%. Remember this number, I'll show you what the number is as at this present time. So this is basically what they had as at up to 2022. In the next slide, we begin to look at the same Global Integrity Report as it has been updated for the past 18 months from 2022, ultimately to date. Some numbers were captured up to 2023. So in the box to the left of your left, facing the screen, you see the integrity policies are more commonly focused on disincentivizing misconduct than rewarding good behavior, something that you should actually look out for. When we talk about bribery and corruption, when we talk about having integrity, having proper conduct, all the policies they reviewed across the globe and in Africa as well, the very purple ones represent Africa and the Middle East, while the light blue represents the global numbers ultimately. And you'll notice from all of them, in terms of the policy that has to do with integrity, Africa and the Middle East seems to be doing much better across board, except in the case of a policy on environmental, social, and governance, ESG. And we do know that when it comes to ESG, there's some other underlying things that they added to it that is outside the culture of the African people, ultimately. So if you look at that very well, you'll see that Africa is really doing a lot. Asia is also really doing a lot. And I can all this relate to culture, our cultural practices, how most of us are beginning to come back to our traditional roots in how we behave, in our demeanor. We're not just embracing the Western way of doing things altogether. So this integrity report is showing us a bit of a shift. And we hope that over the course of time, this will also be reflective in how internationally we are rated as in the corruption index ultimately. Because a lot of this report is now showing that Africa is actually doing well. And most of these regions that are lacking integrity, that are emphasizing more on corrupt practices, are oftentimes in those other jurisdictions, unlike Africa and the Middle East. The next report, you see companies that have been fined almost $1 trillion since 2010 by regulators and in private litigation in the US and UK alone. Total penalties in terms of billions. As at 2023, this number came to over 40 billion. Number of violations as at 2023 as well, it came to shy over 40,000. Number of companies that were involved as at 2023 as well, it came up to, I believe the number is 33,000. 33,000. This is just the US and the UK alone. You remember the number I showed you in the previous slide? The number I showed you in the previous slide, the 18% for the board. This is the number as at today. Oh well, up to date for the past 18 months in 2022, board willingness to behave unethically, 67% of board members admit they'd be prepared to behave unethically if one or more ways to improve their own career progression and remuneration package, from 18%. What does this say about the tone at the top? What does this say about greed? And this is a global number, by the way. It's not indicative of just one jurisdiction. So we can go on to the next slide. The next slide also shows us more graphs based off of the Global Integrity Report of Ernst & Young. We see certain other standards that have been looked out for, number of violations in labor standards. For labor, you see about 4,000 thereabouts in 2023. Tax violations, the number picked up significantly in 2018 to 400, and then made a bit of a decline from a global perspective, of course, to roughly 380 in 2023. In fact, it declined significantly in 2022. Why it's still picking back up? Tax violations is quite alarming. Sometimes this report only shows you when people were caught, not necessarily when the actions took place. Accounting fraud or deficiencies has been skyrocketing like a very, very proper moving momentum in terms of an asset. When you're trading, we call it lightning. This is a lightning move. When it goes up, retraces a bit, goes up again, retraces a bit, goes up again. And that's exactly what's happening with accounting fraud or deficiencies. A lot of cooking of the books has been going on. Anti-money laundering and deficiencies, which I'm very interested in, the numbers significantly plummeted. So the numbers have been managed in 2010 to 2014 to 2018. For some reason, between 2018 and 2022, the numbers spiked up from what seemed to have been under 50 to this is about violations that are caught, by the way, and violations tracker in the UK, according to EY, bounced all the way up in 2022 to about 380, and then it's finally reclining because the UK realized that this is my own suspicion ultimately. Even what you're saying from 2010 to 2018, as which reflects the UK, wasn't necessarily the truth of the matter. It was just that a lot of things were not coming into limelight. Sometime in 2022, a lot of things began to come into limelight, so the numbers spiked up significantly. And now they are sitting up and clamping down on those things that are coming to limelight, and so the numbers are also plummeting down gradually as at 2023. For privacy violations, it's also still skyrocketing, and the same can be said about discriminatory practices in employment. But there seems to be a correction that is taking place post-2022. On the next slide, you take a look at board members and senior executives who are more likely to report misconduct, but they are facing more pressure not to report it. So everything you see on the purple side of the divide is basically the pressure being faced, and whatever you see on the light blue side shows the likeliness to report it. To your right of the screen is what is applicable in Africa and Middle Eastern part of the world. So the left of the screen is what's happening global. That's the global average. So if you look at it from the global average to Africa and the Middle East, Africa and the Middle East is most likely an outlier compared to what you're seeing on the other side. Whereas you can say in Africa, board members who are likely to report misconduct about 64%, those who are feeling pressure are significantly increased. The same can be said of senior and executive management, other management, rarely other employees as well. The number just seems to spike across the African market compared to what is prevalent from a global perspective as well. However, I would also say compare that report to the report on potentially compromised employees. Since 2022, for the past 18 months, counting from 2022 to date, the numbers for Africa and Middle Eastern part of the world is much more better. So in 2022, when you look at those employees who are principled all the way to 2024, you see the numbers from 71% from the globe reducing to 58%. But for Africa, from 61% is increasing to 69%. It just shows that ethical practices are becoming more prevalent in Africa and the Middle Eastern part of the world compared to the global practice. You can look at potentially compromised employees. Back in 2022, you had 24% from the globe, increasing in 2024 to 38%. However, in Africa, from the major number is actually reducing. From 33%, it's going down to about 26%. It just shows you that we are actually doing better in enforcing ethical standard, integrity standards within the African, the Middle Eastern country, according to EY Global Reports. They basically just take surveys across several companies, several boards, ask questions, and then they come out with this report for a global perspective, from a global perspective. So the next thing we'll be looking at is terrorism financing, ultimately. Under terrorism financing, what is terrorism financing really about? So when we talk about money laundering, we're talking about hiding the origin of the funds, how illicit funds are laundered to look like clean funds, ultimately. But for terrorism financing, it's not necessarily the case. The money can be illicitly generated or could be legitimately generated. The focus really is, where does those funds end up? If the funds are ending up for the purpose of financing terrorism, then it's a terrorism financing. So you can be legitimately receiving money from a client, but the client tells you pay a third-party vendor. That ultimately creates terrorism financing, if you don't know who those suspected vendors are. Now, we have rules that completely prohibit against any sort of payment from third-party vendors, but the reason behind those rules is hinged or anchored on terrorism financing. And this is what you should just put into purview. So terrorist financing involves the solicitation, collection, or provision of funds with the intention that they may be used to support terrorist acts or organizations. Funds may stem from both legal and illicit sources, according to the IMF. So we can just begin to take a look at a couple of examples, case studies as to some terrorism financing. We have the FinCEN files. UK banks may have moved money linked to terror activities. Now, what happened over here? StanChart was self-reporting that they had been sending money to an institution called Arab Bank. In fact, there were a couple of transactions, according to them, that took place, not even admitting that they themselves were actually sending the money, no. So StanChart processed almost $12 million in payments for Jordan's Arab Bank from 2014 to 2016. StanChart filed the report, and we also did things like that. It's called currency transaction returns, foreign transaction returns. This is where all these things play in. So they have something similar. They filed their own reports in 2016, intimating their authorities that more than 900 transactions has been done using their own institution, and they suspect it may be used for illicit activities under the guise of charity. They didn't even inform Arab Bank of this. Now, when you're typically filing a suspicious transaction, and this is me saying I've gone through this particular client statement and I've noticed a couple of transactions that's taking place within their own banking universe, it seems to us that it is possible they are financing terrorism. One of the reasons why this comes is because, according to some international sanctions, there are certain countries that you're not allowed to make transfers to, because these countries are known for terrorism financing. Their banks are banks that manage funds of terrorists. So StanChart was self-reporting. Maybe in 2016, a compliance officer came down and told himself, you know what, all this transaction looks very suspicious. If we don't report it and something happens in the future, we might be penalized for it. And so they went ahead to report it. And that's what we typically just do, that we've put you, regulator, in notice, or notice rather. It doesn't necessarily mean that anything wrong was going on. Like you read in the report, Arab Bank denied it. They said Standard Bank never even asked us. I mean, you could have come to us and asked us to do some deeper DD to find out if true there was anything wrong with us or whatever. These payments were reviewed after a US jury in 2014 found Arab Bank had knowingly provided banking services to the Palestinian militia group called Hamas in the early 2000s. And so you hear this particular news in 2014, but you've been doing these things since 2014 to 2016. Now the compliance officer comes and says, let's just report this just in case. And that's exactly what happened, ultimately. That's pretty much just what happened over there. Also, you see a case of the Long Island woman who was charged with trying to fund ISIS. She ultimately took funds. Her name is Zubia Shenaz. She pleaded guilty for committing bank fraud and laundering over $85,000 using cryptocurrency Bitcoin, in particular, to support ISIS, ultimately. So this is just one of the few things you see around terrorism financing. We'll look at another case study over here with Standard Chartered. Yes, the same Standard Chartered Bank. Standard Chartered was publicly accused of falsifying transactions data on SWIFT. When we talk about cooking books, imagine you're cooking what is being shown on SWIFT, ultimately. But understand this is an indictment. There'll be no case around it. An indictment that came up was a bit tampered, but it seems like it is resurfacing in the UK. And from the integrity report that we saw the UK numbers around this and how it's somewhat plummeting. Like I said, a lot of things were happening that people were being quiet about, and now they are coming to the forefront. You call them a country that is not involved in corruption because they have the laws in place, but things were still going on within their own system. And so let's just look at this particular case over here. Standard Chartered, one of the UK's largest banks, avoided prosecution by US Department of Justice after Lord Cameron government intervened on behalf of them in 2012. So sometimes this kind of things happen. One of the reasons why you find it difficult to get some terrorism financing prosecutions is because you have officials in government who basically intervene sometimes on behalf of people. For instance, with everything that happened with the former Kebbi State governor, nothing happened to him in Nigeria, ultimately. Nothing happened in Nigeria. So these are the things that you see playing in. But let's read on. New document filed to a New York court claims thousands of transactions worth more than $100 billion were carried out by the bank from 2008 to 2013 in breach of sanctions against Iran. Now, like I said, Iran is one of those regions where you are not really allowed to be transferring money to because they have a sanction against them. And as we go further in the presentation, when we get to sanctions generally, you see some other sanctions that were in place. So if anything makes you transfer money to an Iranian entity whatsoever, you're actually breaching those sanction rules. And the reason why there's a sanction against Iran is because Iran is known for financing terrorism, ultimately. An independent expert has identified $9.6 billion of foreign exchange transactions with individuals and companies designated by the US government as funding terror groups, including Hezbollah, Hamas, Al-Qaeda, and the Taliban. The transaction lay hidden in confidential bank spreadsheets first handed to the US authorities in 2012, but by two whistleblowers, including the former Standard Chartered executive, Julian Knight. So a simple summary over here. According to them, they say if you look at these spreadsheets, at the surface to seem like there was nothing untoward that was done, they conceal things according to this whistleblower in that spreadsheet. But any analyst who typically handles, maybe I should just read it out to you. In a court filing of 31st May 2024, David Scantling said that the spreadsheet contains records of more than 500,000 separate transactions between 2008 and 2013 that were cloaked, meaning they were not immediately visible in the spreadsheet, but could be extracted through a simple technique well known to analysts in the field. So those who understand how to read those books, imagine you concealing funds in an accounting statement, and those who are very knowledgeable at analyzing that statement looks at it. What happens? They can distill these things. So we're saying here, we could see these things basically when we did a deep dive, digging into this. But what is really the problem with Standard Chartered in this case? Just like I mentioned, a lot of these global banks, if they have presence in a region, and that region gets sanctioned, they ought to leave that region typically. If you stay in that region, it could be a problem. Now, in their own case, they were not even in the region per se, but if you're financing an entity that is based in that region, or maybe the entity even has an account with you, and you're transferring money there, or they're giving you instruction to transfer money to XYZ, and you send that money out, and that money happens to reach Iran, you could be indirectly financing terrorism, any of these groups. And that's the reason why there's an indictment brought against them. So just things to remember, ultimately, in 12 months' time, will the action they are taking today by you be interpreted as reasonable by an independent person, especially where a situation has evolved into actual criminal activity? Right now you're doing it, it seems plain, it seems there's nothing untoward that is wrong. But in 12 months' time, if you think back, you ask yourself, this is I'm about to do right now, in hindsight, would they consider it as being reasonable? If an independent third party was to look through what I have done, would they still see reasons with me that what I did was right? If you can't come to that conclusion, don't do it. Would a reasonable person who is not necessarily in the industry perceive a non-disclosure of a third-party fee or payment to an end client as an appropriate position taken by the firm, or would an excessively expensive meal or client entertainment raise concerns and potential conflict of interest? It's still the same benefit of hindsight. When you go ahead and do it, could somebody come back and say, oh, this is a conflict of interest, this is bribery? These are the things that compliance look out for. These are the things that risk looks out for when we are having any kind of dealings whatsoever. We have to be very careful that should a criminal activity be born out of this, oftentimes nothing comes out. But should it happen, and someone were to do a deep dive, like we saw in one of the cases with Credit Suisse, something has already taken place. A lot of kickbacks have happened. MDs have received it. They would have their criminal prosecution. But when it now comes to the company in question, they had to ask a question. In hindsight, could we have arguably said that this company's controls were up to par to have prevented this from happening? And when they couldn't come to that conclusion, they were penalized. In fact, what I didn't even read out to you is that Credit Suisse agreed to give about $200 million back to Mozambique to help them in taking care of that loan that they had accumulated up to $2 billion. So these are things that you're looking at. Also, lack of transparency, non-disclosure of material facts to the compliance department, or reluctance to have information openly discussed with end clients will always raise red flag. So please, let me put it this way. From the start of your transaction to the end of your transaction, compliance has to be involved. From the pre-negotiation, pre-meetings, the questions need to be had then. We might not be talking to your client directly, but we're seeing things that will cause us to ask you questions to take back to your clients. To confirm A, confirm B, confirm C. And these confirmations is what help us know exactly whether we should be dealing with this person or avoiding this person, or if we're dealing with this person, to what extent can we deal with them? And this is what brings us now to sanctions. So sanctions ultimately looks at how the world economy puts embargoes or restrictions or asset freezes on countries or companies or individuals which are called targets because of certain kind of violations. And we'll also examine the violations in the course of this presentation. So for sanctions, there are two things really that you consider. One is called the SDN, which is the specially designated nationals. These are targets that requires a complete asset freeze, a complete no dealing with whatsoever. And then the second is called SSI, the sectoral sanctioned institutions. And what occurs here is you can deal with them, but you have to deal with them within specific transactions with specific maturity rules. How does the SSI work? Unlike the SDN that says you can't deal with them whatsoever, no financial transaction should ever be taking place with these ones. SSI limits the kind of financial transactions and also creates tenors for it. So you might find a situation where an individual is an SSI, based on the restriction that has been given by any of the sanctioned countries or jurisdictions in the world or bodies in the world. They might say this particular person can deal with only short-term instruments in the fixed income space that has a maturity of just 6 months. Anything more than that, they can't deal. Why is that? Because they want to monitor your transaction time to time. That is where an SSI. Can you be taken off the list? Obviously. But throughout your term as an SSI, this is exactly what will happen to you. So the next thing is to look at basically the legislation across the global space that deals with sanctions. We have from the UN Security Council sanctioning, Sanctions and Anti-Money Laundering Act of 2018. We have the Office of Financial Sanctions Implementation, which is Her Majesty's Treasury. We have OFAC, which is Office of Foreign Assets and Controls. This is applicable to the United States and anyone who does transactions using the US dollars. I can say the same for the FCA as well, but we're about to discuss it very soon. United Nations, Financial Provisions, Arms, Embargo. The UN has something that is applicable in the Bank of Mauritius. They actually implemented it over there. You also have the Special Economic Measures Act as well. There are several sanctions lists all over the world. However, the most notorious ones are the sanction lists that the UK, the US puts out. Why are they notorious? It's for a very simple reason. Most businesses that you do requires the US dollars. Most businesses that you do require SWIFT. Most businesses that you do requires international transfer. As far as the US dollars is a medium of exchange. As far as UK property markets or UK assets are being put into play, their sanctions can cover you with something we call the extraterritoriality rule. Ultimately, it can cover you. It can cover your entity, it can cover that particular individual. And we'll see that in some of the examples we're about to look out for. So first of all, let's talk about how sanction works. We've already explained what the SDN is and what the SSIs are, and these are some people who are actually sanctioned. in the world. If you look at the next slide will take you through the SDN and the SSI list. For EU jurisdictions, if you're within the EU territory, you are covered. If you are on board an aircraft or a vessel that entered into their space or a space of a member nation within the EU, if you're a national of the EU, you can be covered by this list as well. If you have an entity that's incorporated within any of the member states or under the laws of any of the member states, you can be captured as well. If you're an entity in respect of any business done in whole or in part within the EU, even though your entity is established in a different jurisdiction, you can be caught as well. For the US, if you're a citizen or a permanent resident, you have an entity who's organized under the US law. You're a non-US person, but you're located within and operating in the US. You're a non-US person intending to export controlled US origin items or services, or you're a non-US person engaging in activities covered by sanctions, which apply extraterritorially as well. I already mentioned that. If you're using the US dollars, that also applies to you. Now, one of the things that we look out for when we're dealing with sanctions is this is basically a measure that just shows you how this typically operates. If a target is 100% owner of a sanctioned entity, that entity is also a sanctioned entity. It's a very simple example. If that particular person is the SDN is 100% owner of a company, that company is also sanctioned. If you have a company who is also 100% owner of another company, the other company they own is also sanctioned. A typical example, bringing it down to our own layman can be this: if company A is sanctioned, but company B is not sanctioned, company A does an acquisition of company B and gets 100% ownership of company B. Company B automatically becomes sanctioned because company A is sanctioned. This is why we ask for beneficial ownership when we do due diligence. The same can be said. If you have company A, the targets, the individual rather, is a sanctioned individual, he owns 40% of the subject company. And then you have another 45% owner somewhere who is not sanctioned. And you have another SDN who is 15%. His ownership is sanctioned. This is a combined 55% between two sanctioned individuals. That company automatically becomes sanctioned. And it's not enough that you have somebody with 45% who is not sanctioned. So we've seen situations in the past, especially in the UK, where a sanctioned entity, because of its shareholder, that entity becomes sanctioned. And then that shareholder is required to dilute his shareholding within the particular company to start becoming a controlling person within the company. If that happens, it takes you off the sanction list. So we go to the next slide, which is basically a case study for us. Some of us, or many of us, should know who this woman is. Her name is Isabel dos Santos. She used to be one of the richest women in Africa. Actually, she was the richest woman in Africa at one point, and one of the richest blacks in the world. You know, I think back then I used to say she drugs with Alaki Chailat. She happened to be the daughter of a former Angolan president. And this is a sanction that was imposed by the UK. So let's look at it. UK imposed sanctions on Dmytro Fitash, an exiled Ukrainian oligarch who is accused of stealing money from the country's gas supplies. Also imposed sanctions on Isabel dos Santos, former African richest woman and daughter of Angola's former president, and Ivers Lemberg, one of Latvia's richest men, who had been jailed in 2023 for bribery by a court in Riga. The UK Foreign Secretary David Lammy said that sanctions mark the first step in delivering an ambition to take on kleptocrats and dirty money that empowers them. He added the tide is turning, the golden age of money laundering is over. Dos Santos was said to have systematically abused her position as state-run companies to loot Angola's resources during her father's 38-year rule, thus becoming the subject of an imposed asset freeze and travel ban by the UK. This designation was made by a UK regulation aimed against global corruption, allowing for sanction on individually directly or indirectly involved in bribery or misappropriation of property. The Foreign Office mentioned that Fitash has hidden tens of millions of pounds of ill-gotten gains in the UK property market alone. This includes the former Brompton Road tube station, which has been held by his wife, who is also under sanction. David Lammy, representing Tottenham, said, as a London MP, this is personal to me. For too long, previous governments have turned a blind eye to the flows of illicit funds through our capital city. London homes are not the Bitcoin of kleptocrats. Now think about this. From the graph we saw in the integrity report, like I mentioned, between that 2008 and 2013, it may seem like there were no corrupt practices in the UK, but it's not true. They were just not being revealed. They were being concealed. And from what the David Lammy is saying, who is on Foreign Affairs, I believe, he's pointing to the UK Foreign Secretary, rather, he's pointing to the fact that these things have been happening and they've been keeping quiet about it. And sometimes I ask myself a question, you put Africa and the Middle East in the most corrupt countries, but these people are actually where these funds come to. And they are being used to buy properties. And once those funds come into your system to buy properties, of course, you'd have benefited from the economic drive that these funds bring into your system ultimately. But it also shows your countries as being corrupt. Aren't people doing KYC over there or due diligence? Aren't they asking what sorts of funds? Isabel dos Santos, your own state-owned entities, why do you have excessive amounts of money? What are they paying you that you can buy XYZ? So someone now stands up and is speaking about it. This is what happens when it comes to things like sanctions. It moves from government to government. As you are seeing the Foreign Affairs Secretary speaking up about it, the different governments can come and keep this whole hush-hush, and then nothing happens again. So this is one of the things that we've seen that we're in the UK. In the next slide, we'll see something very interesting. This is a snapshot to the left of your screen. You look at the left, you see a snapshot. That box is showing a North Korean vessel that is berthing at Russia to load oil. So you know there are several sanctions that has already been meted against Russia to stop their financing of their, according to the international community, illegal war against Ukraine. And we also know that by this report, you see that North Korea was also sanctioned much in the past. They've been sanctioned in terms of their crude oil supply. So they don't produce crude. But because the world is trying to stop them from creating nuclear weapons, they don't allow them to have enough fuel. In the entire year, they're only allowed to receive 500,000 barrels of crude oil. Or refined fuel, rather. That's exactly what is allowed in North Korea. 500,000, which is far, 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 far less than what the country actually needs to survive. But that's what the sanction is. So if you're supplying to them, then you yourself are also opening yourself up to being sanctioned. So what do we have over there? Since Russia started getting sanctioned, Russia have been looking for support to finance their war efforts against Ukraine. And one of the supports they got was from North Korea. North Korea sent its troops, what do they call the troop again? The Pyongyang troop, to Moscow to help in their war efforts. And the trade for this is in crude, in fuel. So they've been buying over 1 million barrels of petroleum from North Korea. And this is a snapshot that was taken as of November 5, 2024 by a UK-based satellite. So Russia is estimated to have supplied North Korea with more than 1 million barrels of oil since March of 2024, according to a satellite imagery. This is payment for the exchange of these troops. And North Korea is the only country in the world not allowed to buy oil on an open market. The number of barrels of refined petroleum it can receive is capped by the UN as 500,000 annually. So this is a kind of sanction against North Korea, and Russia is breaching that sanction because Russia is trying to fund its war efforts, ultimately. Now, to your right, you see 30 more ships in Kremlin shadow fleets sanctioned. Now, of course, what do you expect? This report came as of November the 12th of 2024. So the moment they saw that Russia has been doing this, the UK took a decisive action as well to start sanctioning a couple of Russian fleets. Russian ships that are basically supplying to North Korea or supplying weapons, bringing in weapons into Ukraine, getting weapons, anything of the sort. Once you're a Russian vessel, they were getting sanctioned ultimately, and the UK is leading the charge on this. So the move, you see that 30 ships in Russian shadow fleets responsible for transporting billions of pounds worth of oil and oil products in 2023 were further sanctioned by the UK, with half of the ships targeted transporting more than $4.3 billion worth of oil and oil products like gasoline in 2023. This move is designed to constrain the Kremlin ability to fund its war efforts in Ukraine. The UK is leading this charge. They have 73 vessels to their date that are sanctioned. Russian vessels that are sanctioned. And there are also other international communities in the EU that are also taking up this approach, but the UK is leading it with the most amount of sanctioned fleets, ultimately. They had about 43 before. Now with these 30 more new sanctioned fleets, they've also added to that number. And they're not just going ahead to sanction the fleets. You know what the UK is also doing? The UK is also sanctioning insurance companies that are providing coverage to those vessels as well. Because as far as they're concerned, they know what these vessels are being used for. So if you're an insurance company, like we have Kesena, we have the Alpha Trust, Covain, and the VSK as well, they were also all sanctioned because as far as they're concerned, you are enabling the shadow fleet. And this is how sanction works, like I told you. By close association, you can get sanctioned when a sanctioned person is sanctioned, or a sanctioned entity is sanctioned. And we showed you how the SDN lists work. Now, there are other ways that you can do things without necessarily imposing a sanction. Sometimes you can just use threats, like what Trump did. By November 30th, we saw a report on his Truth Social, his social media handle at Truth Social, his social media platform. Donald Trump said the idea that the BRICS countries are trying to move away from dollar while we stand by and watch is over. We require a commitment from these countries that they will neither create a new BRICS currency nor back any other currency to replace the mighty US dollar, or they will face 100% tariff and should expect to say goodbye to selling into the wonderful US economy. They can go find, quote unquote, another sucker. There's no chance that the BRICS will replace the US dollar in international trade. And any country that tries should wave goodbye to America, basically American markets, because you're going to see 100% tariffs on any of importation. You can't imagine how this will negatively affect a country like China that exports a lot of its produce as well to the United States. So how did this come about? This stemmed from the Brazilian president, Luiz Inácio Lula da Silva, recommended that BRICS create its own common currency, similar to the EU's euro, to reduce its members' reliance on the US dollar. So he did this. He said this to his BRICS competitor, and Trump fired back. This was December 1st, 2024. And as of December 2nd, if you check the SouthAfrican.com/news, there's a website owned by South African government generally where they put public information about what's going on in their country. They quickly give a report that, there was a misreporting, there was never an intention to create a BRICS currency, but they were encouraging the BRIC nations and those joining nations that are coming to the BRIC member nations to also trade using their own currencies as medium of exchange, ultimately. So sometimes you don't necessarily need to sanction. You just have to create situations that will make it difficult for the other person to do what they claim they want to do. We're going to look at another graph real quick as we're bringing this presentation to a close and opening up for Q&A. As at 2023, we can see the SDN designation by regime. Russia was one of the most sanctioned countries in terms of individuals and entities. They were also sanctioned on issues around global terror. Iran follows suit. Issues around illicit drugs and narcotics, non-proliferation. If you look at the right of the screen, between 2022 to 2023, the light blue shows 2022, the red shows 2023. Human rights violations are reasons why you find people sanctioning. It's increased in 23. Global terror has also increased, marginally increased, but illicit drug and narcotics have significantly increased between the two. Yes, and this is the reason why it's almost more than 3 times the number, almost 4 times the number. Election interference, nothing in 2023 for it to be compared with. Non-proliferation, this is with respect to nuclear weapons, and this is one of the reasons or the rationale that Israel is giving for getting to places like Iran, Lebanon, and the likes. We have cybercrime as well. Cybercrime has reduced. Transnational crimes is somewhat similar, and then hostage taking and wrongful detention is also something that you can find over there as well. You see Russian SDN entity list designation between 2022 and 2023. Mostly this is mostly centered around Russia, to be very honest. I'm just telling you that sanctions don't just happen for happening's sake. It's not just an economic war going on between 2 countries. It's that when you see something within a different jurisdiction that does not necessarily sit right from a democratic global democratic point of view, sanctions are done, economic sanctions are done to try and force the other countries or bend the other countries towards your will. And that's what's been happening. I usually listed around this. And the next time we see the problems with sanctions generally. What are the problems with sanctions? Sanctions consistently changes. That's just the problem. Of course, we have the world most sanctioned country between 22 and after 22, and those are the numbers over there, with Russia leading the pack significantly. But what is really the problem with sanctions? Sanctions are consistently changing. Sanction changes based on governments that control world economics views. That's the simple truth. For instance, before Trump came into administration, the gentleman over there is an Israeli tycoon, Dan Gettler. He was sanctioned since 2017 for allegedly defrauding DRC Congo of $1.4 billion in tax revenue over the past decade. When Trump came in, his sanction was rescinded. The moment Trump left the office, Biden released the sanction. Now that Trump is coming back, what is going to happen? So sometimes this is what happens. It moves according to the political dictates of any given dispensation, ultimately. And that is really it about sanction. Can companies sanction other companies? Yes. Yes, you can make up your mind that you won't be doing business with this particular company or any affiliation of this particular company because this company does not ascribe to something that you are doing. Sometimes you see things around ESGs and company that deals in sustainability. If you are a fund that measures on sustainability ultimately and you only invest in sustainability products like green bonds and the likes, you are automatically sanctioning any entity who wants to be a partner with you who is not involved in sustainability. You wouldn't want to use them because they have no sustainability policies, rules, officer, or projects that they do out in the public. So you see what Access Bank is doing around the sustainability regime. Those entities also create sanctions around that. The same thing can also be seen in ESG, where you see things that speaks to gender equality and they're trying to pass across certain things that is not known to the African culture. Then you go request for funding and those fundings don't come to you. It's a kind of sanction with respect to funding. It's not a full SDN, it's more like an SSI. Because they are saying we can't give you because you don't agree or align with this or with that. And with that, we come to an end of our presentation. Thank you. I'll just also add to the crypto considerations as well. Crypto was something that was developed in the early 2000s, I believe, with Bitcoin's first emergence. It's been growing significant acceptability by the people who thought they were, in my own view, starting some kind of revolution to go against the greenback dollar, to go against Feds and the Federal Reserve's control of currency. There were a lot of conversations around this back in the day, just to show that people were trying to put medium of exchange back in their own hands, like the traditional barter system before we started creating IOUs and fiat currencies and having the gold back, the gold standards and the likes. So they started working with Bitcoin from that. And it has evolved over the course of time to schemes, for get rich quick or tools that launderers can use. The truth is it's been created. A lot of countries have over the time done embargoes, restricted it, banned it. But the people, the users, kept advancing it regardless. They're like, we hear you, we'll still advance this. Look at Nigeria, for instance. One moment we heard it was a complete ban. The next moment, it's not a ban because SEC passed a rule on digital assets. And then CBN gave a circular out, all my banks, you dare not accept anyone who has cryptos to be a client of your bank. And you literally have to tick that's on your phone before you can even open an account in some of these other banks right now. So these are things that have been happening. There's still a war around it. What you can do is not to say, oh, no one should breathe air. Air is everywhere. You can't curtail the air. So what you can do is to try and regulate it, which is what they've done. I remember one old Schwarzenegger film where they were in Mars and they were regulating air supply to the people in that Mars. So what you can do is regulate it. Whatever it is that you are concerned about, create systems around it. And that is why you saw the case studies around Bitcoin using financial terrorism or the market manipulation practices through creating a fictitious market maker to try and promote your currency. Regulations is now come to clamp down what would make these retail investors who insist that they must have these products secured. So that's the only thing you can do. Now, once you've done that, most people say until the government have figured out a way to tax something, they won't care to regulate it. I think the US figured out a way to tax it. There's a capital gain tax on your crypto assets. They figured out a way around it. You have exchanges that are now being regulated in Nigeria. We have the Accelerator Hub that was created by the SEC that has currently registered 2 crypto exchanges in Nigeria, Busha and I'm not sure the second one exactly. But they are regulated, and many of them are trying to get regulated ultimately. So these are the things that are actually happening. The only thing you can do is to try and regulate them. By regulating them, you can only look and see what's happening. I'll tell you something that's happened recently. This was about 2 years ago. We had a lot of these entities who were claiming to be involved in agriculture that came out with GoFundMe programs and strategies. And they had all been out there. Agro Partnership was one of them. There were just many of them coming out, soliciting for funds from the public without the SEC because it didn't fall within the product that the SEC was necessarily covering. And the public would give them funds, loads and loads of money. They would use the so-called funds for their so-called investments and pay you returns as much as 30% to 40% in 9 months. And it looks legit to a lot of people. They've done it since 2018, using Agro Partnership, for instance. It looked legit until, I believe, 2022, when the SEC started setting out rules on crowdfunding. If you read those rules, there are 3 parts that they put out there, 3 cadres of fundings, the criteria you must meet, and the highest cadre was 200 million naira. Now, I remember during Agro Partnership situation, when I saw the court case that was brought against them, one individual alone, or one entity alone rather, who was suing this company, had 200 million naira invested in it. I was at their building when they had the shutdown situation, and you hear people calling 50 million, 20 million. I'm like, if one person, in the same product, by the way, you crowdfund one product, the highest that the SEC permitted was 200 million. So one product funding, Piggyverse will be involved in it. They were the first, when I was talking to the HR there, he said, Piggyverse, these are partners, they come in, they take first before any other person takes. I can imagine how much they would have put in hundreds of millions into that same product. And when things go bad, these initial partners get taken care of before the retail investors. So what SEC did, SEC regulated, by regulating it, we kind of clamped it down. Now you're no longer hearing any of them again because regulation came in. So that's what typically happens. If you can find a way to boycott or bypass direct regulation, which I think is also happening in cryptocurrency space, it might happen. But if you can't do it, it's better you create a system to accommodate it. Sometimes by accommodating something, you shrink it. The same thing also happened in the financial payment services space. Before the CBN started bringing up regulation, corruption, crime, money laundering, bribery, tax evasion, terrorism financing, even if you did not have fiat currency, they will still happen. I just gave you an illustration as to how Russia and North Korea came into an agreement. Give me soldiers, I give you oil, period. Barter has been the primary exchange system from day one. Crypto assets is here, and it's here to stay because people insist that it must stay. Those who are legitimate users, who understand the future of blockchain technology and want to be part of that driving force, will position themselves in that space because they want to be part of it. And some crypto assets are used to fund or finance or even pay for that blockchain technology, like Tron, for instance, like Solana, for instance, like EC3. These are technologies or assets that is used to fund or pay to settle transactions that goes on in the blockchain universe. Outside of that, you would always find people who would seek opportunities to continue their criminal activities using these systems regardless. It's like the baby and the bathwater. You can't throw them both away. We can't say because of the nefarious people who choose not to allow the potential upside to this very universe. Regulation is designed to help maintain those upsides. Just because, and I'm telling you, it's happening with the SEC. Just because a country says, "Oh, we can accept this," because initially all over the world, the reason why Bitcoin was low as 16,000 or whatever was because it wasn't globally acceptable. People were the ones driving it rather. Humans were driving it. Now you are seeing countries saying, "I am pro, I am pro, I am pro," and it changes from government to government, just like sanctions. Like I said, one government might view your policy on this matter as unnecessary, and some might see it as not stringent enough. And so it changes per time. But the laws are put in place, and someone now says, "I want us to regulate this. We can tax it, we can make money from it, we can also stop the criminal elements in it, and make the retail people happy so they don't get to lose their funds. If we make it so good, funds, we don't see capital flight out of our country." Everybody who buys a crypto asset eventually wants to convert that money back to fiat to spend. You can't spend crypto directly, at least not in Nigeria. You travel out the country, you might not be able to spend directly. If money comes into a bank record transfers. So I buy a crypto, for instance, and Access Bank are very good at putting these kind of things out. I buy a crypto, for instance. Somebody transfers the coins to me, I give the person Naira, you label it whatever description you want to label it. Over the course of time, if somebody flags that particular individual as a crypto person, everyone the Benin transfers to are looked into. That's how these things work. So let's say what you are saying is a situation, and yes, it probably is a situation. Regulating it allows us to have exchanges make reports. Now the likes of Busha has registered. Anybody who is using Busha would have to know that all your transactions are being reported to financial intelligence units, special control units against money laundering, or the EFCC. Those reporting requirement now comes into play. The scenario I'm talking about is a scenario where I know a lot of people talk about decentralized exchange. We don't really have decentralized exchanges as much anymore. They are all centralized. Binance is a centralized exchange. They know who all their users are. That is why you see the government forcing them, "Give us your user lists." They know who everyone is. Every time you go through any of those platforms, your details are with those platforms automatically. So if these people subject themselves to regulation, automatically they are subjecting their users to being reviewed by the regulator. So unless you are talking about having a cold wallet separately, and then you get a crypto and you put in that cold wallet, you have a flash or you have an electronic cold wallet, that's one thing, that's a different story entirely. But at some point you want to convert that money back to cash. You want to use that money to go and get real estate. They can still catch you on that. There's always going to be a way, but as technology is evolving, things will get difficult and things will also get much easier. And that's how I can just write this conversation, really. But to say that regulators should not get involved, I think they should. I think they should. Yeah, I mean, it's clamping down on. Look at the example I gave you about the fictitious market maker and the promoters, how they're just taking away people's money. It clamps down on things like that, and that's why we should actually embrace them. And that's about that on that conversation. We can always take it off if you still want to talk more about it.